got the 10-year Treasury yield this morning trading up just 0.4 of a basis point, sitting at a level of 4.237%. The yield has come way down from the highs of the last year as the futures market prices in a rate cut, a 68% chance that the Fed will cut interest rates this September. The Fed's favorite inflation measure, the May PCE index, is coming out this Friday, and economists are expecting core month-over-month prices to be up 0.1% and year-over-year to be up 2.6%. Let's talk the Fed and the backdrop, the economy now, with the former St. Louis Federal Reserve Bank president and CEO, now the Purdue University Dean of the Mitchell E. Daniels Jr. School of Business, James Bullard, back with me. James, it's great to see you this morning. Thanks so much for joining me.
Great to be here. Thanks for having me.
So I'd like to start off with your assessment of the macro story, James. How are you characterizing this economy? We see lots of good headlines, but then later questions about what's behind the hood or under the hood in terms of job growth, in terms of inflation meeting the Fed's target.
Yeah, inflation's not meeting the target yet. It's a little too high. It has come down quite a bit. The inflation rate has come down quite a bit. That's not very satisfactory to a lot of people because there's been a lot of inflation over the last couple of years and the prices are much higher than they were. And I think that's frustrating for many. But the inflation rate has come down. And I think it's going to slow. We're going to get this report on Friday. I think it'll show further slowing there, and that will give the Fed some comfort. But I think they'll want more evidence going forward in order to cut the policy rate. So it's all about inflation right now.
Yeah, I mean, it's all about inflation, but it also looks like the economy is doing well, certainly from the jobs outlook. And yet the other day, Jay Powell said that, well, maybe, there's an argument to be made that the jobs numbers are overstated. I want to play that and get your take on what we see every month that looks like really good numbers, and then the next month we get all these revisions. Here's Jay Powell at the last meeting. Watch.
The labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. You've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see.
What about that, James? Are the jobs numbers overstated? Are we also looking at the jobs going to non-citizens and part-timers? What's your take?
Yeah, I think the immigration story has been one that's hard to get a handle on as far as the official numbers. And if you're talking about legal immigration, that would be one thing, and that would get reported. But the illegal side, it starts to get a lot grayer as to what's getting reported in the jobs numbers. So I think that's been, something that's been talked about a lot in the, in the economics community. But I don't think we have a clean answer to that. On the unemployment, it has come up to 4%. It was in the mid-threes. But 4 is considered such a low number for the U.S. I think not too many people are worried about it right now. And then Jay Powell was talking about the decline in job openings. So job openings, there was a couple of years ago, there were 2 job openings for every unemployed worker. Now it's 1.2. That's about the same as it was before the pandemic. So it's a lot less frothy than it was, but still the economy before the pandemic was considered a pretty strong job market. So I think we're still in a pretty good position with respect to the job market.
And what's the problem with inflation? We've been talking about all of the stimulus money flowing around pretty much all morning this morning, James. And I wonder what your take is in terms of how the Fed sees things. I mean, here you all are, and your former colleagues there, trying to rein in inflation. But the stimulus money and all of the spending, $7 trillion in spending and borrowing in the last couple of years, has gotten in the way. Do you feel that at the Fed? Do you think that governors understand that it's more than just raising interest rates in the face of all of these trillions in spending?
Yeah, I mean, I do think that the spending in late 2020 and the first part of 2021, that a lot of that was as the pandemic was coming to a close. And so what happened was that, the government just basically borrowed money and put it in people's bank accounts. That's about as close as you can get to printing money. And you ended up with a lot of inflation out of that. So the Fed had to step in, I would say beginning in late 2021, but we didn't raise interest rates until the first part of first quarter, I guess, of 2022. And then we got very aggressive in 2022. So that policy is working, and it's bringing inflation down, and core PCE inflation has come down below 3% right now. So that's pretty good progress, but unfortunately, I think the fiscal factors did feed into this inflation, and the Fed had to raise rates in order to get that back under control.
Right. Secretary Janet Yellen unveiling a new slate of financing initiatives to support housing development. That includes $100 million specifically for affordable housing over the next 3 years. But Yellen is calling on the federal home loan banks to voluntarily direct 20% or more of their net income toward these programs. So the money is still flowing in the economy, and shelter inflation is still up, better than 21% since President Biden took office. James, your reaction?
Yeah, I have to say I've been a bit of a pessimist on the housing market. So roughly speaking, we didn't build enough during the period from 2009 to 2019, and then the pandemic came along. You might have thought the pandemic was going to harm the housing market, but instead it went the other way, and you got a boom in the desire for more square feet, more housing. So now you've got a market that's sort of badly out of whack, not enough properties, people sitting on their mortgages, and I don't see that coming back into balance for some time now. So we're going to have to wait and see on that.
So it's all about the supply, as you just mentioned, which, of course, is another issue we've been talking about for years. James, it's great to see you this morning. We so appreciate your time. Please come back soon.